Welcome to the Deck Dive. Today, we're jumping straight into SailPoint's Q2 26 results.
Exactly. We'll unpack the financials, the guidance, and really what it means for identity security.
Right. So, mission for today. What do these numbers actually signal for you? Let's get into those Q2 highlights first. Strong quarter.
Very strong.
Their total annual recurring revenue, ARR, that key metric, hit $982 million. That's up 28% year over year. Pretty robust.
It is. And what really jumps out, I think, is the SaaS ARR. That grew even faster, 37% year over year, reaching $623 million.
So that SaaS transition is clearly picking up steam.
Absolutely. It tells you a lot about where the market's going and, SailPoint's ability to capture that shift. Customers are definitely leaning into their cloud stuff.
And it wasn't just top-line growth. They showed some real efficiency gains, too. Adjusted operating margin expanded, 980 basis points?
Huge jump, up to 20.4%.
Which led to $54 million in adjusted income from operations. That's good financial discipline, wouldn't you say?
It absolutely is. You see that margin expansion. Plus, they hit record cash flow numbers. $50 million from operations, $46 million in free cash flow.
Wow.
It shows they're not just growing, they're doing it profitably, sustainably. That's a sign of, really healthy operations.
Okay. And looking beyond the financials, how did the customer side look? Retention seemed solid.
Very solid. NRR, the net retention rate, held steady at 114%. That's fantastic.
Existing customers are spending more.
Exactly. They're not just staying, you're expanding. And look at the growth in those larger customer deals.
Right. The ones with ARR over $1 million were up 48% year over year.
And those over 250 allocate were up 27%.
Mm-hmm.
That tells you they're landing and expanding successfully, especially with large enterprises.
The complex environments.
Precisely. And another point here, the attach rate for add-on modules for new SaaS customers hit 40%.
Up from 25% last year.
Yeah. That shows the product is sticky. Customers sign up, and then they quickly see the value in adding more capabilities. It's a good sign for future growth from the existing base.
Okay, so these impressive numbers, they don't happen in a vacuum. What's actually driving this demand? The CEO, Mark McClain, talked about this identity explosion.
He did, and the stats are really quite something. 69% of companies apparently now have more machine identities than human ones.
More machine than human, wow.
And nearly half, 47%, have 10 times or more. It's a complete shift.
So how are companies managing this? It sounds incredibly complex.
Well, that's the challenge. 72% of the identity pros they surveyed find machine identities harder to manage than human ones. And now you layer AI agents on top of that.
Right, the next wave.
And it's a big one. 96% see AI agents as a growing security risk. Yet almost everyone, 98%, plans to use more of them.
But are they securing them?
That's the scary part. Only 44% of organizations using AI agents actually have policies to secure them right now. It's a huge potential gap.
And this isn't just theoretical risk, is it? There's a direct line to breaches here.
Oh, absolutely. Look at the numbers. 90% of organizations had an identity-related breach in 2023.
90%.
Yet only 40% feel they have a comprehensive identity security posture. That massive disconnect between the risk reality and the defense posture is exactly why demand for solutions like SailPoint's is so high. It's becoming critical infrastructure.
So connecting this to the bigger picture, what are those key forces really shaping cybersecurity now?
We're seeing what some call the 4 critical forces for 2025. First, just escalating cyber threat complexity. Second, the need to actually operationalize zero trust, make it real across all identities.
Not just a buzzword.
Right. Third, security becoming a core business strategy, not just an IT problem. And fourth, naturally, increased regulatory pressure.
And SailPoint's approach fits into this how?
They talk about their trifecta approach, integrating identity, data, and security context. It's about tackling the full depth and breadth of the identity challenge, not just pieces of it.
Managing the whole life cycle.
Exactly.
Yeah.
And their scale is significant, managing over 125 million identities across more than 3,000 customers. They argue you need that visibility, that context, to really secure things properly today.
So knowing these challenges, how is SailPoint responding with innovation? What's coming down the pike?
They're definitely looking ahead. A big one is their upcoming agent identity security solution. This is specifically designed to govern AI agents and even their sub-agents.
Sub-agents? Like processes they spawn?
Kind of, yeah. Think of the main AI worker and then the specific tasks or sub-processes it kicks off. They're aiming for entitlement-level precision.
Okay, what does that mean in plain English?
It means getting super granular, not just can this AI access system X, but which specific files can it touch? What exact actions can it perform? Under what conditions? It's moving from static rules set up by an admin to dynamic, real-time security that adapts as the agent works.
That sounds complex to implement for companies.
It can be. Visibility is key, knowing what agents you even have. But the goal is to make governance part of the AI lifecycle from the get-go. It highlights why older tech, like traditional PMM, privileged access management, is enough. Well, PM usually focuses on maybe 10% of identities, the really powerful human admin accounts. But this explosion of machine and AI identities requires a much broader, enterprise-wide, and dynamic approach, which is what SailPoint aims for.
Got it. And what about just the sheer number of regular applications companies need to secure?
They're tackling that too, with something called SailPoint Accelerated Application Management. The promise is to help enterprises discover, govern, and secure hundreds of apps in hours or days, not, the years it can sometimes take.
That's a big claim.
It is. Speeding up that onboarding is crucial. Plus, their recent acquisition of Savvy Assets should boost their ability to see into SaaS applications and spot identity risks there.
Are customers actually buying into these newer solutions? Are they getting traction?
Seems so. They highlighted strong demand for newer products like non-employee risk management, data access security, and especially machine identity security.
That last one is their fastest growing new product, right?
That's what they said. It really underlines that market urgency we were just talking about.
Yeah,
Companies are feeling the pain of managing non-human identities.
So how does this position them against competitors? There's a lot of noise in the security space.
There is. It ties into that debate about standalone identity versus broader platform plays. SailPoint's view, and it seems to resonate with large enterprises, is that you need an identity platform that integrates well with other security tools, your network security, your endpoint security, etc.
Like Zscaler or CrowdStrike.
Exactly. No single vendor owns everything. So they position themselves as that central identity layer that connects the dots. And while new players emerge, SailPoint says their win rates remain strong, especially in mid to large enterprises.
Any specific examples?
They mentioned a few wins: a big tech company dealing with a 20-to-1 machine-to-human identity ratio, a large federal agency needing unified governance, a European retailer replacing an old system. These are significant, complex deployments.
All right, let's pivot to the future then. They had a strong Q2, but they also raised their guidance. What's the outlook for Q3 26?
Okay, for Q3, they're projecting ARR between $1.027 billion and $1.031 billion. That's 26% to 27% growth year over year.
And revenue?
Revenue forecast is $269 to $271 million, which is 14% to 15% growth. Adjusted income from operations projected at $42.5 to $43.5 million.
With a margin around 16%?
Yeah, 15.7% to 16.2%. And adjusted EPS of $0.05 to $0.06. Solid numbers for the next quarter.
And importantly, they raised the full year guidance for fiscal 26 across the board. That's always a good sign.
It absolutely is. It's that beat and raise pattern investors like to see. Shows confidence.
So what are the new full year numbers?
They bumped up total ARR guidance by $10 million, now expecting $1.105 to $1.1115 billion.
Yes.
Still that strong 26-27% growth.
Revenue got a lift too.
Yep, raised by $16 million, now $1.052 to $1.058 billion, looking at 22-23% growth for the year.
And profitability.
Adjusted income from operations also got a $16 million boost, now guided to $177 to $181 million, improving the margin estimate to 17.2%. And adjusted EPS guidance was raised too, to $0.20 to $0.22.
So strong execution feeding into higher expectations.
Pretty much. It signals things are running well.
Now, the CFO mentioned a $7 million revenue item in Q2 related to federal contracts. Can you quickly explain that? Was it pulling business forward?
Good question. No, they were clear. It wasn't a pull forward impacting ARR. It was just a timing shift within the year.
Okay.
Basically, they renewed 100% of some federal term contracts in Q2, and the revenue for those gets recognized up front. They initially expected it in Q3, but it landed in Q2. If anything, it just shows good execution on renewals.
Got it. And they mentioned some investments impacting Q3 margins.
Right. They're planning investments for new product launches, likely around their Navigate conference, and also scaling up their sales and marketing engine. So that factors into the slightly lower margin guidance for Q3 compared to Q2's result.
Makes sense. And cash flow for the rest of the year.
They reiterated confidence in about $85 million in free cash flow for the second half, with roughly a third in Q3 and two-thirds in Q4, following typical seasonality. It all points to prudent management alongside strong performance.
Okay, quick look at the market reaction. The stock is down today, over 8% after the earnings, though it has recovered a bit from the lows. Given their strong results, what's SailPoint saying about the broader economy? Are they seeing any macro headwinds?
Their perspective is pretty confident. They see identity security as mission critical now, a must-have.
Not discretionary spending.
Exactly. Which makes the market pretty resilient even if the broader economy has wobbles. They stated they haven't seen any real impact on their sales pipeline from macro factors or things like tariffs.
Why is that?
They put it down to a balanced strategy, growth across different industries. They're not overly exposed to any one sector, so they seem to be navigating the current environment quite well and feel good heading into the second half.
Okay, that wraps up our deep dive for today. SailPoint delivered a really strong Q2 26, raised the bar for the full year, and seems strategically positioned, especially with this massive shift towards managing machine and AI identities.
It's clear identity is foundational to modern security. And that leads us to a final thought for you, the listener.
Go ahead.
Given everything we've discussed, this exponential growth of non-human identities, the absolute need for dynamic, real-time security, and how companies like SailPoint are responding, what does this deep dive reveal about the future of enterprise security that maybe challenges your current thinking? And perhaps more importantly, how much you need to proactively adapt your own approach to managing digital identities in this landscape that's changing so incredibly fast? Something to consider.